Hi traders, and welcome to the Technical Analysis Market Wrap on the 10th of September. So we saw some good movements this week from some of the indices and some of the majors as well, actually. So we'll jump straight into the charts and see if we can identify any opportunities for today and early into next week. We'll start out here with the Aussie USD, as we always do, and you can see that we had the pullback that we were probably expecting from the previous week. It had that big move up and got to that roll reversal zone, which we knew we were going to find resistance there. There was no question about that. We highlighted that, and it did sell off for the rest of the week. Now, look, it's come back down to a level of reasonable support, actually. Like you can see here that you've got support right through this little mini consolidation zone here, and it's also got the 20 moving average to catch it. So, but yeah, primarily you're looking for probably longs here from this point onwards to maybe reach these highs again. You need to go to a smaller time frame to isolate that. But I think there are two trades. It can do one or two things here and probably do them comfortably, which wouldn't really concern me. And I'd be happy to take both approaches. We can go long to the previous high, and that is, that's effectively, about... You're looking at about 100 pips, so it's not too bad, but it's going to take a few pips to get into it. And of course, if it breaks down past the 20 moving average and comes back and tests the support zone from below, there could be a reasonable short there. So what I'll do, I'll pop a horizontal line on the exact level that we're talking about, which is right through here. And then we'll go to the smaller time frame. So you can see here that we've already had that mini drop from the highs here on the 1 hour. You can see the pullbacks to the 20 moving average. Works like a charm every time. All you have to do is trade it off that level and down it comes. Now, this is probably the key level. This is probably the key time frame as well, because this is the one that I would be using to make my judgments on whether I'm going to go long to these previous highs or short again. So what I want to see is a series of higher highs and higher lows out of this level. Now, for this to go higher and look to get to these points here again, we want to see a break above this level here. This must be broken, okay? You can see here that we've got a reasonable amount of resistance, and same through here. So if we get our close above this level here and above these here, that's at around that 74, call it 15 area. That's about high enough. That'll get past it. If we get a close above the 74.15, then that really opens up that trade, and the momentum's with us to get up and to that 74, probably 74.50 to 74.60 would be the targets. You can probably push it all the way to 75, but just be prepared to take profit early if it starts to reverse around these levels. It has had already two big rejections from this level here, so just be very mindful of that. On the flip side, if it does get down below that 73.35 area again, and I'll have to go to a daily on that to show you. If we get below this area here again, it needs to have a daily, 1 hour close, below these levels here. That'll well and truly put the 20 moving average behind it. I wouldn't take the initial break because that's not usually the safest trade. I would wait for it to pull back. So what you want to see is price get down to this level here, then pull back and test the 73.30 level from below. So that becomes a roll reversal zone. Then all of a sudden this support here becomes resistance, and then we'd be looking for shorts all the way down. Then you can basically start looking for shorts all the way down to 72.20 in the first instance, and if it breaks through there, all the way down to 71.20. Some really good trading on the way down. And yeah, I'm not really fussed which trade I take on this one. Just let price action dictate. And when it does one of those moves, you can pretty much jump in and trade to those levels. Pretty good trading on the Aussie USD. All right, we'll move on over to the US dollar CAD now. This has been the star of the show this week. It's been a fantastic trade off this level here. Been really, really strong. You can see here that it rested on the 50 moving average on the daily, but it also had the support of the 200. Now, I know we highlighted that it's always a really, really good zone when you're getting two moving averages basically giving you the same information, which is that cross. So then we can go over to the smaller time frames to really isolate how you actually could have got involved in this, of course. And there are a few different ways, but the 4 hour really highlights it. You can see once it broke out of this zone, once you got the lightning bolt off this level here, we knew that it was strong support here. We highlighted it. Once you got that lightning bolt, the trough, the peak, the higher trough, and then once that higher peak was broken on this candle here, you were off. If you got in really early, you were in around this level here, and you got a really, really good move up. Now, what it can do from here, basically, I'm looking for a move back into the highs here, a 126, 127 sort of 70 area. I think it can break this level, but because it did reject it, you got to respect it a little bit more. It did break down from that level pretty quickly, as it did at this area here. So that was a very close level to it. When it did come back, of course, it found support on the 20 and the 50 as we would expect. It's a reasonable size pullback as well. It's about a 38, I'd say it'd be a 38.2 pullback from that level. Let's have a look. We'll draw that right up to there. Oh goodness, a terrible color. Let me just change the color of that, and so we can see the numbers. Okay, so yeah, you can see here it's around that where it's trading at the moment is between the 38.2 and the 50, which is a pretty good pullback. We're always happy with that on that 4-hour move. So what you're looking for now is a move up to basically the previous highs. I think that's probably the preferred trade. I think for it to go down, it's got a fair bit of work to do. So if you go to a 1-hour chart, you can see that we've got that test. It's about to test the 20 moving average. It's basically do or die time for it now. If it doesn't hold at this level here and the 1 hour closes above the 20 moving average, you can probably start looking for that reversal to actually get back to this level. If indeed the 20 holds it on the 1 hour and it makes a new low, that's when I'd be starting to change my mind on it. So if we get a 1 hour close on this chart here, if we get a 1 hour close below this level here, which is around that 126.10 area, that would convince me that it could be going lower. And I'm not as keen to take this short though, so just bear in mind, on the Aussie I would have taken both positions. On this one, I'm looking for the long. I don't really like the short on this one as much because I think there's too much momentum going in its favor on the upside. So what you want to be doing is taking the more logical trade, and that's definitely the long. So although a short is there, if the 1 hour closes below it, it's not really one of high quality. So I'd be very, very mindful of that and just be looking for the opportunity to go long on the CAD. But again, really good move if you caught it, and it really gave us that sign right there on the 20 and the 50, which we always talk about. All right, so the US dollar yen, still a whole lot of nothing here, still sitting in that zone. It is starting to test the bottom end of it though. You can see here that this is the level that if it's going to bounce, it's going to bounce from here. Flatlined MA still, you can see there, they're basically still going in a horizontal direction, which is very, very unusual. Make no mistake, you can go through a lot of history, and it's very rare that you see a daily close on MAs like that for that extended period. You're talking about, the best part of over a month now where they've just been basically over each other. So that's telling you really that the market's done absolutely nothing. And until it does, we're not going to trade it, right? So it's as simple as that. So what we're doing, we're still going to just set our traps. Our levels haven't changed actually. So more than likely, we've talked about them a few weeks in a row now. The levels that we're wanting to break, you should have alerts set for them. When those alerts eventually break, we can start to trade it again. So, it needs to get above the 110.80 to get excited, and it needs to get below the 108.80 to get excited. Once those levels are broken, it's going to move, and it'll move quick. I know you look at it now and say, oh, wow, it's useless. It's not useless when it breaks out. You just need to wait for it to do that. So very, very difficult trading on the smaller time frames as well. You'll see nothing. But if it does, just keep the alerts set on this one, and we'll just monitor it and wait for the breakouts to happen. All right, the all-important dollar index. This one's had a bit of a resurgence this week. You can see that it's pushed up through it's trying to push up through the 20 moving average on the daily. So, yeah, realistically, what it does from here is going to be a big telltale sign for the euro. It could do, again, it's a little bit like the others. It can do either, and I would probably trade both on this one. I'm not overly concerned which way it goes. The euro is similar to the Aussie and how it's setting up, and we'll have a look at that in a second. But it is trying to find, a little bit of a rally here. It's certainly pushed up from the lows around this point here. So that was around that 91.90 area. So it's had a pretty strong week. It's gone and tried to push down again. The sellers have failed in their battle to get it up. The buyers are starting to push it up now. So we've got another day's trading, of course. I'd want to see this close above the 20 really to maintain the strength. The daily needs to close above the 20, and then I'd be convinced that the euro is going to go short. So keep an eye on this one as well. You want to see the daily definitely close above the 20. If it fails and starts to close below the 50 again, I'm not going to touch it until it actually closes below these levels. So until it gets below 91.80, it's not really a trade for me on the way down. But if it gets a close above the 20 moving average and closes at around that 92.80, that's a different story. Although it's going into these previous resistance points, I think it can break them if it gets that momentum from this level here, and it will start pushing the 93.50 again. So we'll go straight into the euro. Of course, that's the inverse. Now, this is setting up very similar to the Aussie USD. It gave us an extraordinary short at this level here. It was very, very good resistance. It gave us the rejection candle, the shooting star, if you like. And once we had this printed candle there, it was short all the way to the 20 moving average. I know a lot of people got that. I got a lot of emails, so well done on that. That's trading 101. Now, what it does from here, look, ideally, when you're trading pullbacks to the 20 moving average, you do want to see them actually have some momentum in their favor. So, if you're looking at this area here on the chart and it pulls back to the 20, great reload zone. Again, a great reload zone. Because this is the first test of the moving average from being above it, and it hasn't really turned and started to push up yet, I'm a little bit cautious that it may find a little bit of trouble. The first target is obviously the previous highs again. So yeah, you're definitely going there to the 119 if that's what you're looking for on the long. But for me, I'm just being a little bit more cautious. I'd like to see it actually get past that level before I trade it. I know you could say, well, it's a scalp up to that level. But again, I'm a little bit conscious that we've already had the good short, and I'm almost looking for a break of that 20. It's almost like I don't trust it because I trust the dollar index more. So I think the dollar index is longer than more than the euro is. So that gives me a little bit of bias. So just be very cautious around this level. Doesn't mean it's not going to do it. It just means it's not a great trade that I'd be jumping in on straight away. But if you go to the smaller time frames, actually what I'll do, I'll highlight this level with a horizontal line. So then when we break it down, you can see this is the exact level that we're talking about. We'll go to the 1 hour. And what we need to see, you can see that we've got really good support there, which is obviously coinciding with the 20 moving average on the daily. If we get a break and a continuation down on the 1 hour trade, what we're looking for is a break of this level. I would wait for the retest. I would want to probably exercise a little bit of patience on this one because I think you'll be well rewarded. If it does get back down, closes below the 118 and then comes back and tests it from below, that's the role reversal zone, your click point, that's where you're shorting, okay? So pretty easy trade because then you're also shorting underneath the 20 moving average. All of a sudden, the 20 moving average on the daily is providing resistance instead of support. And I think, the sell zones are easy to find down here. You've got 1740, you've got the 1670. All of those are very logical areas. So it can definitely go up, but for me to go up, I'm going to have to wait for it to break this level. If it breaks the this previous resistance, I'll be happy to start longing it again. But that's obviously got a bit of work to do that. The short is a little bit easier because it can happen a little bit quicker. If it breaks down past the 20 moving average and retest it from below, we've got a lot more scope for the short, and you can get that into that a little bit easier. So that's my preferred trade, but I would take both. But of course, it has to break that high first before I get excited about that one. All right, the last one we'll have a look at today is the ASX 200. Now, this had a really, really big sell-off yesterday. It broke out of that ridiculous zone that we've been seeing for the last 3 weeks, where it's basically done nothing, and it's been very, very wicky on a daily chart. You can see here. It finally had a very, very big break. Nothing short of a pullback miracle will stop it from closing below the 50 moving average now. On this daily candle. It's very driven by what's happening in the US on the S&P 500, of course, at the moment. Today's trading will be very, very interesting on this, but I get the feeling that there's been a bit of a pent-up demand for profit taking on this one. Everybody's expecting it to go short, and I think the damn walls finally busted yesterday, and it had a very, very big sell-off day. It was about nearly 2% down. So yes, it's recovered some of it, but today's action is going to be interesting. I would not get excited about this one until it breaks this low now. I'm not going to short it down to the low. If it does happen to get down here and closes, even trades probably below it. I don't think it even has to close below it. So you could probably draw a horizontal line at this level here. You know you've got very, very strong resistance from this previous consolidation point here. But if we get trading below this level here, so when I'm talking about that, I'm talking about the 73.30. If we get trading below the 73.30 and even so much as a 1 hour close below that level, I will be looking for shorts down to the 7200, which is around this level here. Okay, so that's the target for this one. It doesn't even have to close on a daily to actually make that happen. I think if we get the 1 hour close below this level through today's trading session or even in New York tonight, that's the signal for me that I'll be looking for the 72 zone, which is pretty good trading. I think it'll have trouble getting past that in the first instance, but that's still, a reasonable amount of trading. You've got about 120 point range there, which you can certainly do. Failing that, if it pulls up to the 50 moving average and closes above the 50 moving average, I would require at least a 4 hour for that to happen, a 4 hour close above the 50 moving average on the daily. So that would be this zone here. So if it closes above the 74.50 on a 4 hour chart, then I'd be looking for the longs back into the higher range of this level, which is around that 75.50. That is not the likely trade, mainly because of the seasonal time that we're in. So we're expecting more weakness. That's not my preferred trade, but if you want to long it, that's where you'd be looking for. But the short is definitely in play. You can see it's in the middle of that range now, so we're not going to do anything now, of course. But if we get trading and a push down throughout today's trading session, and we get a 1 hour close below the 73.30, we can start setting our shorts for the 7200, and that could provide some pretty good trading. Because I think the ball's starting to roll now. We've seen the big moves, and yeah, hopefully they'll continue today and into early next week, so we can start getting out of these ranges and start get some good trends in. So hopefully everyone's had a great week's trading. I think it's been a bonanza for some of the scalping that we've been talking about. Hopefully you were able to take care of some of those. Have a great weekend, and I look forward to seeing you all next week.